It's 9:30 a.m. The bell rings, the market opens, and for most traders, this is where the pain starts. They jump in blindly, chasing candles, thinking every move at the open is an opportunity to make money. But here's the truth: you should only trade the market open if the stock is satisfying a few key conditions. That's it, no exceptions, because anywhere else, it's just noise. And noise at 9:30 a.m. will cost you money, a lot of money. And look, I know how hard this is because I have been there. Back in 2019, I actually tweeted this: "Help, how can I stop myself from trading in the first 4 to 5 minutes? Not my edge. I try not to, but then I see a good setup, I take it and I get I just need to stop trading the first 5 minutes. Any suggestions?" This is what I posted in 2019. And to be honest, this post is still live on my Twitter, now X, so feel free to check it out. But that was me in 2019, struggling with the same exact thing you are struggling with at the moment. I couldn't stop myself from clicking buttons at the market open, losing money every single day. And that's exactly why I had to develop a framework for trading the market open. That framework, built around levels of significance, tape reading, and clear rules, is what completely flipped my results. These days, I have made $30,000 to around $50,000 trading the market open, and all of it is recorded live on my YouTube with full execution. So when I talk about this, it's not theory, it's lived experience. And that is what I will show you: how to know exactly when to trade at 9:30 a.m. and when to sit on your hands. First things first, why do you even trade the market open? And the reality is that the open is sexy. It feels like there's money to be made every single second. And yes, the moves at 9:30 a.m. can be massive, but that's why most traders blow up there. They see a big green candle and they're gonna jump in long. They see a red flush and they're gonna panic short. What happens? Whipsaw, stops get hit, and accounts get drained. Now, why does this happen? It's because they are relying on random levels. Because if you look at a daily chart, you can draw 20 different support and resistance lines. One trader is gonna mark the yesterday's high, another is gonna mark a weekly high, someone is gonna pull out a Fibonacci level, other guy is gonna look at the 50 moving average, and all of them look valid on the chart. But not all of them matter. That's the trap. Higher time frame levels are subjective. Everyone tells you to mark your levels on the higher time frames, but these levels are gonna be subjective. The market doesn't respect your random lines on the higher time frames, which means when you take a trade off the market open, you are basically gambling away your money, and that is why your account is getting drained. So now, what's the alternative? And the answer is levels of significance, because these are the levels the market has proven to respect. They are not random, they are not subjective, they are where the real supply and demand is stacked and where the big money shows up. At these levels, you will often see price either bounce hard or reject aggressively. Why? Because this is where the key battle happens between the buyers and sellers, and buyers and sellers are what creates the market. Stop losses are clustered here, which means when one side wins, the other side gets squeezed out, and that's when you get those insane one-directional moves. And that is why I only care about stocks opening near these levels. Anywhere else, I am not interested, because without these levels of significance, the open is just noise. Think about it like this: if you're looking at a chart with 20 different levels on the higher time frames, only 2 or 3 of them are going to be actually respected. Those are your levels of significance. The rest are just clutter, and this is where the new traders go wrong. They treat every line equally. Professionals know that only a handful of levels are worth trading. Now let's talk about how to trade around these levels before we actually get on to marking these levels, taking a few examples. So now let's say in the first example that the stock is gapping up and it's actually opening near a level of significance, and this is the opening print right here. This is my level of significance. In this case, I'm allowed to trade it off the open because this stock is opening near a major level of buying and selling. So we might see a good squeeze towards the upside or a good push towards the downside, depending on if this stock is holding a bit stronger or weaker than the market. In this case, I told you that it's gapping up, so I'm allowed to take it off the open near the level of significance based on tape reading if we are seeing strength at the market open for a push towards the upside. And that is the exact reason in my Notion playbook right here, I have a criteria called the open exception. That means if the stock is actually opening near my level of significance, I can click yes, and if it's not opening near the level of significance or the Camarilla pivots, which I talked about in one of my last videos, I'm going to link that video towards the end of this video, but I have to answer this question every single day. If the stock is opening near a level of significance, including the Camarilla pivots, I'm going to answer yes. If not, I'm going to click no. So that means if it's yes, I'm allowed to take a trade off the open, and if the answer is no, I'm not allowed to take a trade right off the market open. And by the way, if you want a copy of this template, there will be a link in the description box below. Simply enter your email and we're gonna send it out to you. Now let's take a second example. In this example, the stock is actually gapping down. It's actually opening near a level of significance, and I'm watching the stock on the daily chart anyways for a break towards the downside maybe. That's why you need to look for level of significance around the technical setup on the higher time frames as well. So my game game plan on this stock was that, okay, the stock is making a daily range. The daily range low is my level of significance. So I'm looking for a break towards a downside. Now, what happens off the open? We actually gap down. This stock is holding weaker than the market. Maybe the R wall is also high. That is relative volume. That means maybe it's supported by volume. So off the open, we had a quick fake out towards the upside. So right at this fake out, I want to look at tape reading. Near this level of significance, I want to see there will be a fight between the buyers and sellers. But now because of tape reading, I can see that if the buyers are winning or the sellers are winning. Maybe we see a small push towards the upside. The buyers get faked out right here. I don't see a lot of strength on the tape. I see weakness on the tape. I'm going to short it right here because after a fake out especially, the move towards the opposite direction can even be stronger because people who entered their calls position, their long position right here, they will also get stopped out, leading to a panic selling. And now in the third example, we will take a look when not to trade the market open. So that means the stock is opening in the middle of the zone. So for example, stock has been making a range on the daily chart. This is the range, for example, it's making a range and it's opening right in the middle. That's where the stock is opening. So now the level of significance is towards the upside or maybe towards the downside. So I'm going to wait for this stock to come near these levels of significance, then look at the tape reading if the tape is strong or weak, and based on the technical setup and my game plan, I'm going to decide to take it long or take it short. I actually emphasize on my setup because a lot of traders, they are reversal traders, so they have to wait to see if we are seeing weakness on the tape and then take it short maybe. I like to trade breakouts, so near levels of significance, I'm going to see if there's strength on the tape and I might take it towards the upside. That is why you need to wait for the stock to come near these levels of significance and then look at the tape where the major buying and selling is happening. Because personally, I get this question a lot, like, hey Jay, how do you get better at tape reading? Because especially beginner traders, they try to read the tape every single second of the market open, and the tape is going to give you false signals if you're reading the tape around these levels in the middle of the range. That's not the point. The point is to look at tape reading for strength or weakness around your levels of significance, where the fight is actually happening, where the actual fight between the buyers and sellers is happening. Near those levels, you have to look at the tape reading and see which side is winning. So now let's see how to mark your levels of significance on the higher time frames. And I was watching Nvidia personally on 29th of September. This was a Monday. I'm using the replay feature just to show you guys how the chart was before the day I took this trade. So on this chart, I'm only going to mark my all-time high on Nvidia, which was basically last week, 22nd of September, which is 184.55. Now, a lot of traders, what they're going to do, they're going to mark this high, then they're going to mark this high, then they're going to mark like this low, they are going to mark this low. I have seen a lot of charts with 5 different levels within a $2 or $3 zone on Nvidia, which is not the way to go about it. Personally, what I'm going to do is I'm going to delete all these drawings and just mark the all-time high. And we know that on this stock, I want to find a level of significance where the major buying and selling, and usually it's near the whole dollar level, like 180, 190, 170, 160, 150 on these stocks. So we need to confirm that with the help of technicals. We can see that if I mark a zone around 180, we had multiple high of the days right here, multiple low of the days between 179.5 to 180.5. Then we got rejected from this 180. This is a level of significance because the last time we got rejected from 180, we actually moved 6 to 7% towards the downside. And before that, we actually closed right near 180 and we sold off approximately 9%. So this is where the shorts are kicking in because we are seeing a push towards the downside, 7 to 8% to 9%, sometimes even 10% after a push down from 180. And also sometimes it's actually good to look at the monthly chart and see what was happening. So if you look at the monthly chart of Nvidia, yes, we are in a straight trend towards the upside. This is the all-time high, which we marked already. So we are looking for a break towards the upside. On the weekly chart, we can see that 180 is actually the high of the 2 weeks ago approximately. So 2 weeks ago, we had a nice high, which is 180.28. And then the next week, we had an inside bar. So this week, the range of this week is inside the prior week. So it's potentially a bull flag on the technicals if we actually get above 180. So we saw multiple high of the days and multiple low of the days near 180. And it's also a bull flag on the weekly chart near 180. So if we break the high of this week, which is 180.28, 180 zone, we might see a break of the bull flag on the technicals for a break of all-time highs. Now here's a one-day chart showing exactly what happened on that day. We can see that on 29th of September, we gapped up. We actually opened near the level of significance, which is 180. I'm not marking 180.8, 180.9, 181.2, 181.23, 182.4. No, I'm just marking 180. I have these two levels and we were opening above 180, which is a level of significance because it's a psychological level. It's a weekly bull flag level and we have seen multiple low of the days and and multiple high of the day is near 180. On this day, we were actually opening above this level. I took my trade right off the market open. And if you guys want proof of that, glad you asked, because I actually posted a live trading video talking about this trade, where I entered, where I exited, live trading, and I made $22,000 on this trade. I'm going to make sure to link that video towards the end of this video. I'm actually going to show you guys my journal from that day. We are going back. This is September 29th, NVIDIA 180 breakout. The one thing for that day was for me to focus on not to overtrade, but that's not the point for this video. The point of this video is open exception. The answer was yes. And why the answer was yes? You guys can look at my game plan from that day. 180 to 180.3, nice range on the daily. R4 also stacked right there. If you guys don't know what R4 is, I made a video on Camarilla pivots. I'm going to link that video towards the end of this video and in the description box below. So I'm going to link the Camarilla pivots video and the live executions of this trade towards the end of this video. Just keep that in mind. It's a really good trade, and I have recorded a lot of my live trades looking at these levels of significance and trading around Camarilla pivots. We can see that we actually opened above R4. R4 to R6 is the breakout zone. If we are holding above R4, that's a breakout zone. That is what I discussed in the Camarilla pivots video. We opened right there. I entered my position. Decent size. I entered 400 contracts at a fill price of 2.04. My investment on this trade was approximately $80,000. At one point of time, I was up actually like $40,000 on this trade. You guys can see, but including partials and ads and taking my losses, you guys can see what happened in the live trading video. I ended up making $22,000 for the day, which is still an amazing trade. Amazing breakout on the technicals, amazing tape reading right near 180. And let's talk about tape reading now. So what happened on the tape? So this is the tape from that day, 29th of September. This is the book map. We can see at 5:28 p.m. what happened. We will see a quick push towards the upside. This stock was holding stronger than the market. Again, I explained everything in real time in that live trading video. But right before the market opened up, we had a big buyer at 180. Which is amazing. Right above 180, we have 45,000 shares. So even if I take a trade off the open, this is my stop loss. I have a clear stop loss. If we go for this buyer, it's completely okay. But if we are not able to reclaim back above this 180, that is going to be my stop loss of the market open. And you guys can see right here, I entered my position looking at that big buyer. My order was ready to enter. Again, was the live trading video. I entered right off the market open. I was in no drawdown, and we saw another big buyer, 6,000 shares, 45,000 shares, and it just straight rallied towards the upside all the way to 184. So because of tape reading, technical setup on the daily chart, we were making a daily range, weekly bull flag. Along with this stock opening above 180, which is a level of significance, it was opening above R4, which is the breakout zone in the Camarilla pivot. And finally, along with tape reading, I was able to execute on this trade, making $22,000. Now, let me give you another example of how to mark your level of significance. This is from May this year. Earlier on, after the earnings, the stock was gapping up. And I only had this one level on this day because this 143.5 zone is a major resistance level of significance on this stock. Because what happened after this rejection, the stock actually pushed down 26 to 27%, which is insane. Like I just mentioned, near 180, the stock pushed down 9%. This was a 27% push down. So a lot of short sellers are shorting this stock right here, a lot of profit taking, but this is a major level of significance. Now on 29th of May, NVIDIA was gapping up. It was opening right near this level of significance. Personally, I mentioned earlier that I am a breakout trader. I like to trade breakouts, but I want to see if we are seeing some strength on the tape near 143.5 or weakness. And on this day, I actually saw weakness. I took this trade towards the downside, making approximately $16,000 on this trade. I actually talked about this trade with my live executions and the tape reading. We were seeing repeated sellers near 143.5. In the podcast episode I did for Chart Fanatics. That podcast episode will be coming out in the next 3 or 4 weeks. It's gonna be like a 20-30 minutes complete breakdown of this trade, why I executed on this trade, including the levels of significance, including tape reading. So make sure that you guys watch that video once it releases. It's gonna be towards the end of October or early November 2025. Now let's take one last and final example of Tesla and how it reacted around this level of significance. We can see that on Tesla recently we had this major level of significance, 357. On the weekly chart as well, it was holding really strong, multiple rejections from 357. Once we broke out, we had a crazy rally towards the upside. This was a simple level of significance. There's another level of significance that I'm going to show you and where we got rejected from right here. First, we need to understand the overall market context. On Tesla, because of the new bill that actually removes the incentives for EV vehicles starting 30th of September. So everyone, all the analysts and every trader expected that Tesla to sell more vehicles vehicles this quarter from July to September. Why? Because people who wanted to buy an EV, they're going to buy it now rather than later, because the incentives are going to be going away starting 30th of September. And that's why we had this crazy rally on the stock towards the upside. But now there's something called buy the rumor and sell the news in the stock market. That's what happened on this day. It's actually a good setup. We bought the rumor. Everyone expected Tesla to blow past the delivery numbers. This is what they did. On that day, on 2nd of October, they actually released the delivery numbers. They beat the delivery numbers, but the stock pushed towards a downside. So this is the overall market context. Let's now mark our levels of significance. On this stock, as it is near all-time high, we have to look at the weekly chart and the monthly chart and mark our levels. So we can see that the high of this week is approximately 465. After that, we directly have all-time high, which is 488.54. And this is a level of significance because if we actually look at the daily chart and go back earlier in end of 2024, we had a push towards the upside, crazy rally after the election. This was the election rally. After that, we tried to go back for the all-time high 500. This is where the sellers stepped up, and sellers were actually able to push this stock down all the way around 50-55% on the daily chart. So this is a major level for the sellers. Sellers are going to try their best to hold this stock under this 465. This is the last straw for the sellers, because if we actually hold above 465, it might actually go for 488, 490 or even 500. And to be completely honest with you guys, I personally messed up on this trade. Yes, I caught it, but I was red off the market open first. Let's see what happened. We actually pushed down under 465. We retested 465 and sold off. But at first, I tried to take the stock towards the upside. That is my fault. I went down. I actually lost $25,000 on trying to take it towards the upside. But then on the puts position, I made it all back and I ended the day with around $2,000 in the green. But this was a nice playbook setup. We can see that weekly level. We had a push down, bounced from this level, tried to go back towards the upside. This is similar to the daily chart that we saw in 2025, earlier in 2025. Had a push towards the upside, sold off again, and then sold all the way down, back down to around 430. It was just downtrending the whole day. We can look at the daily candle as well. The ATR of the stock was $17 and it moved $35. That is, it moved 2 times the ATR because of this buy the rumor, sell the news, overall market context. We had a level of significance, 465, which is a major level for the shorts to kick in because it's the last straw for the short sellers. If it actually gets back above 465, it might actually go for 500. So now you saw it with Tesla at 465, NVIDIA at 180, NVIDIA around 143.5 back in May this year, 2025. You will see it again and again in other names that at these levels of significance, the market either bounces really hard or it actually rejects aggressively, and that's where the one size gets squeezed. And here's the thing, this is exactly where tape reading becomes critical, because a chart alone won't tell you who is winning the battle in real time. At these levels, the tape shows you the truth. Are the buyers really slamming the offer? Are the sellers absorbing with size? Is there conviction behind the move, or is it just noise? And that is why I always say, with the market context, levels of significance and tape reading, that is your edge at 9:30 a.m. And honestly, this is how I went from posting on X back in 2019 asking for help to stop trading the first 5 minutes to now making multi 5 figures gains on my opening trades, like the NVIDIA example we saw, and I have plenty more examples on my YouTube channel. Tape reading at these levels of significance, that's been the game changer. And as a new trader, I was not aware of how to read the tape. Eventually, when I got the experience, when I started learning about tape reading, it actually made me aware of when to trade and when not to trade the market open. And by the way, inside Summit Academy, which actually launches in January 2026, we are only 3 months away, we will dive deep into this exact process. Education backed up by real trades, not only theory. Complete breakdown of my market DNA strategy with 20 plus hours of education, 5 plus hours of tape reading education with real examples. And if you want to learn this properly, join the waitlist. The link will be in the description box below. So now, the next time the bell rings, ask yourself, is the stock opening at a level of significance? If not, step back, protect your capital, and if it's actually opening near your level of significance, then pay attention, watch the tape and trade with intent. And that's the real 9:30 a.m. strategy. Not chasing every candle, but waiting for the right battle at the right level at the right time. And this is now the best time to smash the like button, subscribe for more amazing trading content, and follow me on Instagram for a lot of behind the scenes of a trader. And I will see you guys in the next one. Peace out.